Hey friend, it is Brandon with Assisted Living Investing. Excited to have you here on our live today. Today we're going to be talking about breaking down the top expenses in assisted living. This is a question I get from a lot of people, and they want to know what that looks like. And I had an email from somebody a couple months ago, and I have not gotten back to him. So if you are watching this, I think your name was Steve. I apologize for not getting back to you. This is kind of a video that is in response to a little bit of some of your questions there. I do this for a lot of people, so if you have questions, make sure you email me or get over to the Facebook group and make some comments there, and we can create some videos for you. Before we get started with the topic of breaking down those top expenses in assisted living, want to remind you to get over to the website assistedlivinginvesting.net. We're going to have a ticker going down below, and that will get you access to the business plan checklist. So assistedlivinginvesting.net/BP checklist. Again, links down below and everything. And so I'm going to put my screen up here. There we go. So you can go get that as a free resource for you. You can also get the underwriting calculator to help you out along your investment journey. So excited to help you out with that. Let us get over here and give you a quick intro of who I am and why I'm teaching you and my background so you know exactly where I'm at. So my background in assisted living, I own and operate two assisted living facilities. I live in Utah. One of my facilities is in Colorado. The other is in Idaho. So we are marketing those. I operate those both remotely and have the opportunity to do that, and have been doing that since 2020. So coming up on 4 years here in the next few months. I've secured over $1.5 million in SBA funding as well on three separate acquisitions. Have operated out of state, as I mentioned, and have a master's in healthcare administration with over a decade of experience working in the healthcare industry for various companies. So have a lot of experience and background. If you're new here, make sure you type in newbie. And if you are an operator, you've been here and you're just kind of wanting to get some clarity, then type in operator. And for those of you who are live, make sure you type in those questions so I can get to them here at the end of the call. And if you are not live, that's totally fine as well. Type in the questions because I'll do my best to answer them either in comments or create a separate video for you. So make sure you have put your comments in here of your questions, and we'll get to those. So let's talk about the top five expenses for your assisted living business. And if you purchase the business planning guide, which is assistedlivinginvesting.net/bpg, we'll have links down below on the YouTube in the YouTube video for you to do that. You will actually get access to one of the tools that I have, and it is going to give you a background of exactly what it cost me to operate my facilities last year or the year before. And for both of my facilities, I'm really transparent with it, and you can see exactly what our finances look like. It's a question that a lot of people have. But the five main expenses that you need to be aware of as you are getting started with assisted living are number one, staffing. And it is the biggest expense by far. It is a huge expense. Probably 30 to 50% of all of your expenses are going to be staffing. So we're going to get into that really deep here in just a couple minutes. Next is your debt service. So your mortgage, your lease, your whatever it is that you're paying to have the property that you need so you can run this business. That is number two. Number three is insurance. And your insurance is you're going to need a few different basic types. We're going to get into that here in a second, but insurance is going to be a big expense, and it is a necessary expense for you. You want to have that insurance in place. Number four is your utilities. So this is gas, electric, water, TV, those types of things. We'll get into that here in a few minutes as well. And then food, you got to pay, or not pay, you got to feed your residents and make sure that they have the food that they need. That's part of the service that you're providing. So those are the five things that we are going to be talking about. I have another video that I did a while back. So if you get on the YouTube channel and search for, I think it's like assisted living expenses. If you just search in YouTube for that, it should pop up and you can get an overview of that. This one I'm going to go pretty deep on. That one gives you another view of what this looks like. So if you're just trying to figure this stuff out, these two videos will be really valuable for you in helping you understand what it's going to cost to operate that facility. So let's talk about staffing. So staffing, as I mentioned, it's probably 30 to 50% of what you are going to be dealing with from an expense perspective. I was actually working with one of my coaching clients earlier this week or late last week, and we were doing the underwriting, and what we found is the amount of money for the opportunity that we were looking at specifically that she was going to have to pay for staffing was just not going to make sense. Like, it just made that deal impossible for it to work. And the way that staffing is going to work, there's actually a few different areas here. There's three. Wages is number one. Number two is your payroll taxes, and number three is your benefits that you're going to offer. So if you get into the over to the website assistedlivinginvesting.net, and under you get that free underwriting calculator, it's going to have some of those things in there. You need to have budget lines for each one. There are some advantages from a tax perspective in doing this, which is nice. And I don't claim to know all of those, but if you work with an accountant, they can explain to you why you want to own a business. There are tax advantages to doing this when you're paying other people's wages and things like that. But as you get into it, what you need to understand is your wages is such a big number for you. And what you need to do to figure out what those wages are is you take the dollar amount per hour that they're making and you multiply that by the FTE that you're going to have. FTE it means full-time equivalent. And so when you're doing this and you're building out some kind of a method of figuring out how many staff you need, you're going to track that. So if you build out a calendar that says I need X amount of staff for these shifts, and you come out with it and you say I need 5 staff members, I need 5 caregivers to come in here and care for my residents, and I'm going to pay them each $15 an hour, for example. Let me see if I can pull up a quick calculator so you can see. No, not that one. Sorry. Let's pop over here. This is the problem of doing things live. Where is my thing at? Oh man, gotta love this. Okay, hold on a second. I'm gonna pull this down and let me go find my screen. Try to do something on the fly and make this really cool, and just ruined it. There we go, and we'll add this back in here. Okay, to avoid that from happening again, I'm going to go over here on my other computer and do a really quick math for you. 15 times 5, that's 75, and then you have to multiply that by 40 hours a week. So you're up to $3,000 per week for those staff. That seems really low to me. $15 per hour. Let's see, right here. $15 times 40. That's 40 hours a week. That's $600. Then you have 5 staff in there. That's 3,000. And then if you times that by 52 to get up to a year worth, that's $156,000 that you're paying all of those staff. Then on top of that, you're going to need to pay your administrator, who is probably going to be between $40,000 and $70,000, depending on where you're at and what the market dictates. It could be a little bit higher than that, but let's just say that it's plus $50,000, and that now you're up to $206,000 for your wages. And then if you added in a nurse who's getting paid something that's a little bit lower, maybe they're a 0.25 FTE, they're at your facility 10 hours a week, but they are making $40 an hour. That puts them at $400 dollars per week, 1,600. I'm doing quick math because I can't do it over here. Let's see, 400 times 52. That's 20,000 plus the 206. You're up to a little over $225,000 in just your wages. So this is huge. It's a big number for you that you need to be aware of. On top of that, you're going to have your payroll taxes, and that's probably going to be 10 to 15, 20% on top of that, depending on the state that you're in, that you're going to have to collect. That comes out of that is payroll stuff. It's a large expense that you need to be aware of as you get into this, for sure, as you're trying to figure things out. What's really nice though is a lot of payroll software is going to figure all of this out for you. And so if you get in and you use something like Gusto, and I have a link down below for that, and we'll make sure it's on the Facebook group. It will figure all of these numbers out for you, so you don't have to worry about like factoring and figuring all that. They do benefits administration. But you can see just from that quick number that I came up with 5 staff members, an administrator, and a nurse, you're at $225,000 for the full year, in doing that. And for a small home, that's a significant amount. And the larger the home is, the more staff you're going to need, and it can really impact you. And maybe $15 is too low, and you've got to be up to $20. We end up paying between $16 and $21 an hour for our staff, depending on which level they're at and which state they're in. So it is a really, really big expense. I've got a comment here. Um, so your sister's a caregiver, med tech, and you're a nurse, being the administrator. So that's good. And I know we're chatting back and forth. So make sure you get your questions in here. With those expenses eliminated, you're trying to come up with a good number to have saved up to start. So yeah, I mean, if you're that person and you're one of those staff members and you're the administrator, you're still going to want to pay yourself, right? So you need to make sure that that's in there. Now, if you're in a spot personally where you can float yourself for a few months and the business doesn't have to do it, and you're the administrator and you're going to pay yourself $60,000, $70,000, you can reduce that number from these wages that we just went through. And you can see what that's going to do to give you a view of it. But this 225,000, if I divide that by 12 on a monthly basis, that's $19,000 roughly. And that $19,000 per month, you're going to split that into your pay periods, but it's about $10,000 per pay period that you're going to have to do. That $19,000, what I suggest that you do is you get 2 to 3 months worth of expenses saved up to do it. So if you're at $19,000, that's $38,000 in just wages for 2 months. Or if you're going up to 3 months, that's $57,000. So hopefully I did the math right in my head. So that kind of gives you an idea. Just in wages, that's what you're going to need to have set aside for 2 to 3 months of expenses. In this scenario where we went through with 5 staff members, an administrator, and a part-time nurse. So it kind of gives you an idea of what that might look like. You can back that all into the numbers that you have based off of what you're going to get. But that's, and then, if you're the administrator, you're not paying yourself anything for a little bit because you have personal reserves, and you want the business to get up and running and get launched. Then if that's the case, then you can reduce that amount by probably $5,000-ish per month. And so you're now at like 15,000. So that's per month, 30,000 for 2 months, 45 for 3 months. So that kind of gives you an idea, hopefully, of what that would look like if you're trying to figure that out. So if you have other questions, just type them in. I'm going to move on to the next slide. So let's talk now about debt service. So as far as debt service is concerned, this is going to be your loan. This could be your existing loan, a new loan, existing in the sense that you own the home already and you are doing a renovation on it or doing a conversion. A new one where you are buying something brand new, whether it's a business or a home and you're doing the renovation. It could be something where you're leasing. This is the amount that you are paying for the home, for the property where you're going to be running that assisted living home. So you need to factor in what this is. Now, if you own the home, this is going to be a really clear number. And if you own the home and you bought it 5 years ago and you have some really good rates, this might be a really good option for you because your debt service number is going to be significantly lower and it's going to be fixed, which is really nice. If you're buying something new, then you're going to be subject to these higher interest rates or possibly like a commercial style loan, SBA loan, which has higher rates than you might get if you had a personal residence that you're now turning into an assisted living home. So this number is going to vary. It really does. And it depends on the market. It depends on the terms that you can get with the bank. All of those things, like you could be anywhere from, I don't know, let's say it's crazy and you have a $500 mortgage, all the way up to $15,000, depending on where you're at in that spectrum. This number can fluctuate greatly based off of the opportunity that you're looking at, and really has an impact on the profitability when you are underwriting. Your staffing number is going to be pretty set. It's not going to change a lot. Once you figure that number out, it's going to be there. the number that has enough variability in it to determine if this is a good opportunity or not is oftentimes going to be this debt service number. And it's going to be dependent on the deal that you find. And if you find a good one that's going to make sense for you financially. This is also where really any real estate deal has a magic number. You can figure it out. You just have to get to your number that makes sense for you from a debt service payments perspective, and then just see if you can get somebody to agree to the payment terms for that. Is really what you have to do, and it's a lot of negotiating and a lot that goes into that, which is something that we teach here at Assisted Living Investing. So it is just kind of getting that funding and finding the property and all of those things. But debt service is a huge one that you need to be aware of and can fluctuate quite a bit. So let's move on to the next one. This is insurance. So insurance is another thing that you absolutely want to have. There's three types that you want to get. There is liability insurance. So this is somebody falls or something happens to a resident or staff, really more so the residents at the home. You want to have that. Second one is property. You have hail damage, you have a fire, tornado, whatever happens, a hurricane comes through. You want to have that property insurance in place so that you have coverage for the house, for the property. Excuse me. And the third one is going to be workers' comp. And the workers' comp insurance is going to cover if your staff member, falls down or cuts themselves or whatever happens while they are at work. It's going to cover them for that. So those are the three basic ones. And I did a video on the YouTube channel that I think went out last week that was all about finding an insurance broker. And the importance of finding one is they're going to help you find the right rates. They're going to help you negotiate. And the nice thing is you're not really paying them. They get paid. They kind of get a cut out of the premium that you put in place for that. So they're great at helping out from an expense perspective. What you could anticipate paying. Let's see, for our two facilities, if I combine them, it's 4, 5. That's probably about $5,000 per month, maybe a little bit more for the two facilities. And these are 16-bed facilities, one in Colorado, one in Idaho. So take that for what it's worth. Yours might be higher or lower depending on how many residents you have and which state you're going to be in, which population you're going to be working with. There's a lot of factors that go into it. But if it's for me, for two facilities, $5,000 a month, you could probably expect to be about $2,500 to $3,000 for those all three of these insurances combined for your home. So that kind of gives you an idea of what that expense is going to look like for you as you're trying to figure out if something is going to be profitable or not. Talking to an insurance broker, explaining what you want to do. If you have a house in mind, all of these things are going to allow you to get quotes, and quotes are free, and that will help you understand. If you are looking at an existing business, you can get access to their finances and you can see exactly what they were paying in insurance and probably equate that pretty well to what you're going to be doing. It might be slightly higher because chances are they've been in business for a while and have a track record of being good with their insurance and not having issues. So the premiums come down over time, which is really nice to have with insurance. But it's one of those things you have to have it. Number one, the state's going to require it if you want to have a license to operate your facility. But number two, you want to have it because of the protection that it gives you as you are operating your facility. It protects your business, protects you personally, protects your home, your residents, your staff. There's a lot of protection that comes into having insurance. So you want to make sure you have that. Next is utilities. So utilities, if you already own the home, you're going to have a pretty decent idea of what this is going to cost you. But if not, then talking and you're buying from somebody that has owned the facility, they can give you an idea of what utilities are. They're not going to change much. They will go up with inflation. And there's also seasonality. If you own a home, you know this, that there's some seasonality with the different utilities that you have. And in the summertime, your power goes up, and in the wintertime, your gas goes up. And that's just kind of how it works. The ones that you want to be aware of are power, gas, water, waste, internet, and television or streaming. What we have found, we use a service, and for anybody that's like in one of my coaching programs, if you're interested in learning this, we use a service that has helped us save a significant amount of money on our waste contract at one of our facilities because I mean, you have 16 residents, you're going to have a lot of waste. So we were using like Waste Management or something like that. We went with a different one that has allowed us to save quite a bit of money, and we use a company that helps us negotiate some of those things. With television, you could just go and do something that's really broad and get like an Xfinity or DirecTV or something like that's a little more broad. Or because everybody is shifting over to streaming and um, there's so many different options there, you could consider doing that instead of paying for a high ticket TV package, and that might save you some money there as well. And just figure out, kind of create your own thing using Netflix and Disney and Hulu or whatever it is that you want to do. You can put those things in. What you want to make sure that you are doing is still meeting the needs of the residents and what they want. And so if they want a specific show and it's not on a streaming service, it's probably going to be better off for you to just pay a little bit extra per month to get the service that has that channel that they want. To keep them happy. So just kind of one of those things where it's like, is it worth it to save $50 a month in this business? Um, so that and not get something that's going to make your residents happy. It's just one of those things you got to kind of balance back and forth and see which way is going to work best for you. So yeah, that's what I would suggest there from that standpoint. But utilities, you want to make sure that you're understanding what those are going to be. Utilities can also vary depending on the size of the home and the utilization of those utilities. So you could be looking at anywhere from a few $100s up to $2,000 for your utilities, and I'm sure in California they're probably even higher than that. So depending on your state, you could be spending quite a bit of money on utilities. The nice thing about utilities is they are pretty set. They don't fluctuate all that much. So once you know what they are, you're going to have a pretty good idea of what that looks like. Food is the next one. This is your fifth one. And food is something that I like to use as an acronym that's called per resident per day. I tried to look this up online to see if other people use it because I've heard people say it, but I couldn't find anything. But per resident per day is basically the amount of money per day that you spend per resident, and then you would times that by the number of residents that you have. So let's say that the number, let's just do some really easy math because make it easy on myself. Let's say you're spending $10 per day and you have 10 residents. So that's $100 per day. No, sorry, 10 residents, $10 per day per resident. You have $10, 10 residents per day. That's $100 there. And then yeah, that's going to give you an idea. $100 per day per resident. And then you multiply that by the 30 days in the month, and that's $3,000 is your food budget. You can typically find this number for your state online. If you say what is like the average cost per resident for food in assisted living in my state, you can often find that number. Actually, there's a few websites that will get that number for you. $10 seems high to me. I would say you're probably a little bit closer to like 7 or 8, depending on which state you're going to be in. But that seems to be something that's a little more realistic. And you might be listening to this and be like, "There's no way nobody could live off of $10 per day." What you have to understand is you're buying in bulk. You're buying for 10 residents. You're not eating out for every meal, and you go and you buy you Costco or Sam's Club or something like that, and you're buying large quantities of food and splitting that up amongst other people. And so it really does get down to a smaller amount of per resident per day as you're trying to figure that out. It is very realistic to get there. And there's, like I mentioned, things online where you can find this. Another nice thing is using a meal planning service. We use Grove Menus, and I don't have any referral links or anything like that. They're great. They're really good at helping you determine what you want to put into the meals, help you plan those meals, give you a recipe for it, and also give you a shopping list for it so you know exactly what you need to spend. We use Walmart Plus, and Walmart Plus allows it to get delivered to us. So our staff, our administrator, doesn't have to go shopping because it just gets delivered to the house. We probably pay a little bit more for it, but it saves us a ton of time. So it's also a little bit worth it. So food is something that you need to make sure that you are feeding your residents. and it's a number that can fluctuate, but you can get pretty close to that. And understanding what it is. So those are our 5 base expenses that you need to be aware of. So we talked about, I'm going to try to remember them, staffing, huge expense. Second one is going to be your debt service, what you're paying for that property, that where your facility is going to be. Third is going to be your insurance. Fourth is going to be, I'm going to go backwards because I can't remember, utilities. And fifth is going to be your food. So those 5 things will make up 75 to 80% of all of your expenses. They really will. As I mentioned earlier, if you get over to the website, assistedlivinginvesting.net/BPG, you can get the business planning guide, and a part of one of the bonuses for that course is showing you my exact finances a year or two ago, and I'm really transparent with what that looks like, so you can see how these things play out as you're getting into that. So, any questions? I know we've had a few people come in and out as we did things, and there was the one question there. I hope that answered where you're at from. The question was around they're starting a facility. Sister's the caregiver, and she's a nurse that would also plan to be the administrator. And with those expenses eliminated, trying to figure out a good number. And we talked quite a bit about what that looked like for them, with the understanding that, yeah, you still probably want to pay yourself. So you could maybe eliminate some of those expenses, but you also need to pay yourself. And so there's kind of this fine line. And then I tried to do a calculator for those that are watching this on the replay. You understand. But I ran a scenario: 5 residents, or 5 staff, administrator, and a part-time nurse, and you're up to about $19,000 per month, based off of a $15 per hour with those 5 staff members. And that's a significant amount. You can cut down a little bit with what you're paying yourself out there, but it's still going to be probably at least $14,000-$15,000. So big expense. Probably going to take up close to half of all of your expenses as you get into that. Question here, the website again for the plan. So yeah, and I probably said this, assistedlivinginvesting.net /BPG will give you the business planning guide. Or if you want the free business plan checklist, that's assistedlivinginvesting.net/BP checklist. That's along the ticker, and we'll have links in there as well. So you can get that one for free, or the planning guide goes pretty deep into that, and that's assistedlivinginvesting.net/BPG. Boy, Paul, guy. I can't do the phonetic alphabet for you there. But yeah, no problem. Any other questions? Make sure while you're watching this, make sure you like the video, subscribe, ring the bell as well, and in Facebook, make sure you're turning on notifications and things like that, so you get notified. We're doing these on Tuesdays and on Thursdays. Tuesday's the live, Thursday is a pre-recorded video that goes out to you and gives you some guidance. If you have questions or anything like that, make sure you're putting that on there, and have some exciting stuff as well coming out here. I think we'll start announcing it next week, so make sure you stay tuned. If you're on the email list or in the Facebook group, we're going to have quite a bit of stuff going out there to give you some guidance. So some really fun, exciting new things that are coming to assisted living investing that I'm excited to share with you. So make sure you stay tuned for that. With that said, get the free business plan checklist, assistedlivinginvesting.net/BP checklist, and we'll have links down below for that as well. I want to thank you for watching. Hopefully this was helpful. Make sure you like the video, subscribe, and ring the bell as well so you get notified. And does residential assisted living sound interesting to you, but you don't know how to get started? At assistedlivinginvesting.net, we are here to help you through the process, start to finish, to help you launch that assisted living business so you can get that time and financial freedom that you're looking for. I want to thank you for being here with me. Excited to help you along your journey. Thanks for watching, and have a great day.